Greetings and thank you for joining us at FutureMoneyTrends.com. I'm here with a legendary resource investor, Eric Sprott of Sprott Asset Management. It's kind of the gold standard when it comes to investment advisories for the resource sector, the junior resource sector. Eric, thank you so much for joining us.
Hey, Daniel, my pleasure. Always happy to help spread the word around.
Eric, I wanted to talk to you about the Federal Reserve. You guys recently did a report at Sprott's Thoughts, and it lays out a clear case. The debts are rising, the economy is weak, middle class is shrinking. Yet we do have this bull market. Of course, no, the middle class is not participating. And I just kind of wanted to get an idea from you of where does this all go? The Fed is just kind of keep faking this recovery and faking this recovery. What is the Fed's end game?
Right. Well, I mean, I'm totally with you on the lack of economic progress. I mean, we see it every day in all the data, whether it's, housing today is, 40 or 50% below its previous high. Auto sales are still well below their previous high. And somehow we seem to think that we've made some progress here. And even though, as you pointed out, there's just more and more debt being taken on. Of course, debt implies consumption, and it implies, in essence, forward consumption, because you bought something that you really couldn't afford, therefore you had to borrow the money. And, of course, someday, if we ever get back to sort of sane interest rates, the cost of having borrowed this money is going to be would overwhelm not only the U.S. government, but, of course, the individuals who have taken out this debt. And obviously the Fed is very aware that the recovery has been tentative, notwithstanding what they say we're in some kind of recovery. And they certainly would be aware that rising interest rates would just end it so dramatically. And as I say, both for the people and for the government. So that's why we have all this printing of money. And I sort of find it rather interesting that when the U.S. stopped QE3, that the next day Japan started their money printing. And I suspect that when the ECB starts printing money on March 15th, we may find out miraculously that the Japanese stop printing money on March 14th, because somebody has to be buying the bonds all the time. And I find it really sort of instructive that when you think of the ECB saying, well, we're going to buy government bonds, you're going to, why would they be buying government bonds of all things? We're already at record low interest rates. It just doesn't seem to make any sense to be buying bonds whatsoever. Like, there's no economic impact. It just makes the cost of borrowing cheaper for governments. And I think, in essence, that's what it's all about. Let's just make the cost of borrowing cheaper for those who are debtors. And, of course, those who are savers will suffer accordingly. And we have a very sort of insane financial situation going on here, where the savers are punished and the borrowers get the benefit of it all, which is kind of a topsy-turvy situation to have.
When you talk to other wealthy individuals or government officials, is there any kind of a sense of where this is all going to be in 5 years? I know it's the potential for a major crisis is there, but what is the ultimate solution? Do you think they will try to come up with a new currency on the eve of a dollar run? Is it going to be some type of war, which we always have constant wars going on, or what is the Fed? What do you think the Fed? I guess we're speculating on what these guys are thinking, but what are they thinking? How do they end this?
Well, I think what they're thinking is we just have to extend and pretend that there really is no way out. And in fact, even the former chairman Greenspan said, it's all not going to end well. I think he made those comments about 2 days ago. And that seems obvious to any thinking person. You just keep adding on the debt, which creates consumption, but you got to pay for it someday. And, of course, under the Austrian school, the minute people have to pay the debt down, of course, your economy then gets in trouble, right? Because you don't have the spending power in hand that the debt allows you to have today. So I think all I can see is just extend and pretend. We know we're in a jam. When we talk about, there used to be a discussion on the exit strategy. I mean, that was probably 5 years ago. Mm-hmm. And, of course, that never manifested itself. And now we talk about raising rates. And, of course, rates were probably supposed to be up by this time already. And Chairman Yellen's discussion in front of the Congress suggested, well, it's not going to be anytime soon here, and all data dependent, and let's be patient, and all that nonsense. I mean, we can't take an interest rate increase. With just go housing might kill auto sales. So I think they'll just keep running it along until someday something gives. And what that giving thing is, I'm not exactly certain what it is. Maybe it's, if we end up with job losses because of, people just don't have the income, and all of a sudden, you continue to get these weak reports from whether it's McDonald's or Caterpillar or HP, and we keep announcing layoffs and so on, that it becomes apparent to everyone that there is no recovery. And I think if we look back over these last 5 years, other than the stock market, there's been very little that's happened in the real economy that would give anybody confidence. We just saw I think it was the Gallup confidence poll went negative a couple of days ago and had a very big decline from the previous month. So, people have real issues to deal with. Forget the fact stock market's going up. They get real out of pockets, and when you realize that 60% of the population is living paycheck to paycheck, it doesn't take much to tip them over the edge.
Eric, when I look at like a historical chart of some of these miners, or specifically like the TSX Venture, I mean, it really feels and looks like a bottom. Just looking at a chart, I mean, this is really, really low historically. But everything you just said is exactly what gives me hesitation. So my question is, if we do have a weak economy and it's sluggish, and there's less demand for commodities because of the result of weakness in the economy, could this mean more pain ahead for hard asset investors?
Sure. Well, of course, there's two classes of hard asset investors, and one class is those who invest in economically sensitive hard assets, and those who invest in other hard assets like precious metals, which aren't really economically sensitive in the sense that in my mind, the biggest reason to own precious metals is because of the risks in the banking system. And here we find ourselves today that I think I saw some data point that, probably in 30% of the world's population, interest rates are negative, so you get nothing for putting your money in the bank. And yet, when you have your money in the bank, you take on all the risks of a leveraged bank. And I've always thought that it's the risks in the banking system that would cause people to go to gold. And now you have another level of concern out there, and that is, of course, the currency risk. Mm-hmm. And we've seen so many currencies that have been incredibly weak, including, the Canadian dollar, the Australian dollar, the Nigerian naira, the Japanese yen, the Russian ruble, the Ukrainian hryvnia. Azerbaijan just devalued by 33%, I think it was, a couple of days ago. And the reasons to own gold are now twofold. You have the risk in the banking system, and you have the currency risk. So in my mind, the reasons to have those assets which protect you in an economic decline, mm-hmm. knowing that an economic decline causes a financial problem, which is what's going to happen here, is more stout today than it's ever been.
A lot of resource investors, they've had some of the best names, but they are down significantly. And I wanted to get your opinion on for both smaller investors and, let's say, investors with six figures or more involved in this market, assuming the money is invested, designated for investment, not for groceries or pay the mortgage. But, if you're down 50%, what is the best thing for you to do right now in regards, if you're looking at these juniors and you're looking at the physical precious metals? What should you just hold tight? Should you consolidate to a few specific holdings?
Well, that's a very tough question. Of course, the best answer I can give you, just can tell you what I do. And I continue to be a buyer here. I've had a couple of announcements out this week where I've taken on significant interest in some of the smaller Canadian listed producers. I just think that the reasons to think that gold and silver will both rally massively here are higher. The returns on these things could be staggering. When I say that, I always go back to when I really got hugely involved in precious metals back in 2000, right at the low. I mean, the index went up something like 1,700% in 8 years, which was such an outsized return. It was beyond belief. Now, we've given a lot of that back here, but it tells you that what can happen should silver and gold do what they should do. And I say it should do it based on all the physical data around in terms of the buying of physical gold versus the supply of physical gold and silver for that matter. And I think these stocks can go a long way. Unfortunately, we've had to have more than patience here. We had to have almost an iron will to hang in there. But I know for myself, I keep deploying assets in the precious metals area as I take them out of other areas, because I think that's ultimately where the very, very outsized returns that we experienced in the first 8 years of the last decade will reappear. So I'm kind of staying the course. I don't like to think I'm just preaching my book, because I think there's substantive evidence that physical demand for gold is well in excess of the supply, that the demand for silver, there's some unbelievable things on in silver that tell you that the price of silver has to go higher. So I'm a great believer in that sense.
Eric, Chris Powell of GATA has said that there are no markets anymore. There's only manipulations. And Keith Neumeyer told me in a recent interview that he was so tired of the manipulation that he was on air calling for other silver miners to hold back physical silver for a full month in 2015. I also know that you wrote a letter to the miners to hold back some production. And then Max Kaiser years ago did a buy silver crash, JP Morgan. You know, the cartel is openly manipulating the markets. It's very visible. It's not too hard to connect the dots these days. Do you think the good guys, and I'm kind of referring to people like you and Neumeyer, you think you guys will ever come to a point where you proactively break the cartel rather than wait for it to implode on itself?
Well, I mean, there's a lot of collective thought in that way, and I'm part of that, as is Keith and many others, including all the guys from GATA and Chris Powell. I just think that, I mean, I'm sort of like Janet Yellen, I'm a little data dependent here, right? And all the data is suggesting that we have way more demand than supply. And you can look at data such as, I think the UK shipped 1,000 tons of gold into Switzerland last year. And I would remind your listeners that the UK doesn't produce any gold. You got to, well, whose gold was it that was being shipped over there, right? I mean, there probably aren't 15 groups in the world that own 1,000 tons of gold. And, of course, most of those are central banks. So you have to believe it's central bank gold that went to supply the demand from Asia. We saw in the U.S., and in November, I think it was, they shipped out a net 41 tons. Well, who's got 41 tons of gold sitting around that they can ship out from the United States other than the government? I always find it interesting to say that Barrick produces 20 tons a year, and yet the U.S. government somebody was able to ship 41 tons in a month. So I have to believe it's coming from central banks to keep gold in check, because gold and silver, particularly gold in this instance, are the canary in the coal mine here, and they just can't have gold going up, particularly with these massive volatility in foreign currencies that we see, because it would tip everybody off that this fiat paper is worth nothing. And, of course, we're seeing that manifested in a lot of ways when currencies are going down 20, 30, and 40, and 50%. What's the currency worth? It's so unusual that the currencies are the most volatile sector in the financial market.
Yeah.
So that's really bizarre. I mean, normally you expect bonds or stocks or something like that to be the most volatile sector, but in reality, the most volatile sector is the fiat paper, which I think is telling you something. How can that be more volatile than the underlying fundamentals of stocks and bonds? And it's just, we're in a very wacky world here. So I don't know when it cures itself. I don't know whether it's going to be the industry. I suspect it's going to be people who aren't in the play right now getting in the play. Mm-hmm. And unfortunately, one of the reasons that people don't get in the play is those who think they're buying gold on, for example, the COMEX, and we saw a lot of buying in January, and I guess since the bottom in November. What happens is, of course, the commercials have shorted them all as gold. So there's bona fide people who thought there was a reason to own it. And then, of course, the commercials crush them. And it's such a great game. I mean, you can run gold up $100 from a long position, and you run it down $100 from a short position. And these guys are creaming multi-billions every month just running the commodities up and down. And unfortunately, the speculators and the institutional investors are always on the losing end of it, even though they might have had bona fide reason to go there and say, this is an undervalued asset, and all that's good and well. But if the markets are under the control of the commercial interests and they act in concert, which of course is a subject of discussion these days, it's hard to win on a short-term basis. I have no doubt that we will win on a long-term basis, an intermediate-term basis. Whether it's a short-term basis, I can't tell you that. I would hope that some of these investigations into gold trading might stop this process that goes on in the COMEX, where the commercials just run it up and run it down again. So, but when that's going to come to an end, I can't predict that. But I can assure your listeners that the supply-demand situation of both gold and silver is very, very prospective for higher prices.
Well, let's talk about that, because I know you do obviously have some a data edge when you guys are running those the PSLV, and I wanted to ask you about physical supply in general with the effects of the new Shanghai Gold Exchange, as well as what you're seeing as far as how tight supply is for the precious metals.
Sure. Well, obviously there's a great debate going on as to exactly how much gold China is consuming. And I find it instructive that, and I happen to believe that they do consume something like 2,100 tons a year. The Indians, certainly left to their own devices, would consume 1,000 tons a year. We mine about 2,700 tons. It suggests that the whole market might be in excess of 4,000 tons when you include recycling, of which nobody really has any hard data on whether or not recycling is that much. I've never been able to confirm those numbers. And of course, the World Gold Council just suggests that China's demand is, I think they said it was under 1,000 tons. Well, there's a big difference between 1,000 and 2,000 tons in a 4,000-ton market. I mean, it's an extra 25% of the market. So all the data I look at suggests that demand might be as much as 6,000 tons a year. And these extra 2,000 tons a year are coming from central banks. A la 1,000 tons from London. The exports from the U.S., net exports, that's where the gold's going. And the year before, in 2013, of course, they took something like 800 tons out of the ETFs of physical gold that went somewhere. And last year, there was hardly any withdrawal from the gold ETF. This year, so far, we've had net flows into the ETF of something like 70 tons in the first 2 months. So all the numbers support the physicalness of gold demand, which is well in excess of supply. So we'll just we'll just have to wait and have it play out. The other data point I can tell you is that in the case of silver, the Indian government, or not the Indian government, the India imported something like I think it was 7,000 tons of silver this year, and that's in 14. 2 years ago, they only imported 2,000 tons. So they've changed their imports by 5,000 tons in a 27,000-ton market.
Wow. So
they bought an extra 20% of the whole market, and probably about 40% of the investment market, and yet the price went down in that time period. The data is just bizarre relative to the paper pricing that goes on in the markets.
Is money starting to flow back into the junior miners?
I would say for sure it is. I just read an article that I think there's been 14 deals done this year in terms of M&A. I know myself, I keep looking at places where I can invest more money because these stocks are so cheap. There's a lot of money went in the gold, the GLD ETF this year. As I said, they've put on 70 tons, which I think is probably about $4 billion worth of gold has gone into that fund this year. So, yeah, I think you can see that things have changed here, and maybe that's why they had to knock gold down. The minute it goes up, of course, all the money comes rushing back in, which would be very positive. And maybe that's why they whack it down, so all of a sudden, people think, oh, maybe I shouldn't be buying GLD, or they sell GLD, although there's been very little liquidation of GLD so far. But it keeps everybody sort of concerned about where things are going when all forms of logic seem to disappear in terms of the pricing mechanism as manifested on COMEX.
Yeah, it's very rough, especially with the Dow making all-time highs again, defying logic. But here you're trying, investors are trying to do the prudent thing, the right thing, the thing to protect themselves and their family, and they've just been punished for the past 4 years, and the general stock market keeps going up. With the dollar sentiment being so high, where the bulls are crowding that trade, and then the gold, of course, is on the opposite side, especially the gold miners. It would seem like this could be really the peak for the dollar and maybe the bottom for gold. Would that be a fair analysis?
Well, I believe that. And, Daniel, it's always interesting to look at stock markets that have that continue to race up. When I think back to the 99-2000 increase in NASDAQ, only to find out that it got bombed for about 75% for the 3 years after that. You look at the 07-08 financial crisis, when things like Citigroup, GM, Ford, Fannie, Freddie all went to $1 a share. And seemingly nobody could predict it, right?
Yeah.
Seemingly no one could predict it. Well, I can assure you, and when I mentioned those last names I just made, I was short every one of those stocks at the time.
Yeah.
They all went to $1. And it was so obvious to me what would have to transpire here, as it was very obvious to me before the NASDAQ crash, what would have to happen. I can't even tell you the names of companies I would have shorted back in 2001 and 02 that don't even exist anymore. But believe me, there were lots of them. You could short $100 stock that became valueless. You could short Nortel at 130 and it went to $1. So it always seems odd to be suggesting that things are out of place when they are out of place, because everything looks normal.
Yeah.
Well, I can assure you everything's not normal, and I personally think that the central planners have a big hand in the market here, keeping it up. And sooner or later, there will be an unintended consequence somewhere along the line, something they don't have control of. Maybe one of the things they don't have control of is, for example, currencies. Is the U.S. government going to get involved in protecting all the currencies in the world? Well, now you're talking a lot of money. And maybe, with a little helping hand, you can keep the stock market up, because luckily if you put a big fat order in and you get the HFTs to run in front of you, it really doesn't take that much anymore, because everyone's, you put an order down the slowest pipe you can find and all the HFTs jump all over it. Next thing you know, the market's going up. You might not have even spent any money. So, but currencies is a different thing. That's real money now.
Eric, before we close out, a lot of people are listening to this because they want to hear your thoughts on gold and silver, but a lot also own other resources. So I just wanted to mention a few other resources. If you just want to, you can spend 10 seconds or 60 seconds or whatever you want to just commenting on your initial thoughts. I'm just going to name about 5 of them here. The first one is uranium. Yeah.
Well, I can probably cover all of these off with one thought. My biggest concern is the risk in the financial system. And so in my mind, the favored resource is the precious metals, because, as I said, it ends up negatively affecting the banking system. I am, however, a believer that real things are more valuable than paper things. Mm-hmm. I'm not a big investor in those whatever 5 commodities you're going to mention. I'm not a big investor in them because I'm kind of focused in on gold and silver. And And of course, unfortunately, one of them is oil that's gone down a lot recently, and who knows the real reason it's gone down. Some people say it's supply and demand. Some people suggest that it was fomented to punish Russia and Syria and places like that. I don't really know the answer. It could easily be one or the other. I happen to believe that owning a hard asset is way better than owning a paper asset. But I think within that, the best thing to own is the precious metals.
If you had, let me ask you this then: if you had to own just gold, just silver, just platinum, just palladium, which one would you hold?
Oh boy, that's a tough question, because I think that the platinum palladium thing looks really interesting. Now, I'm not an expert on platinum palladium. Rick Rule and some of his partners at Sprott spend way more time on that than I do. I tend to focus on gold and silver. And certainly between gold and silver, I think silver will be by far the more responsive metal if people decide to go there, because it's such a small market cap, if you will. I mean, there's not really much silver floating around in inventory. I think the whole value of it would be something like $20 billion. I mean, that is such a small amount of money vis-a-vis all the money printing going on, that I think silver could really be the star amongst those two. But I do believe that the shortages that seem to be manifesting in platinum palladium could make them every bit as exciting. But I don't pretend to be an expert. I don't watch the supply demand day to day like I do in gold and silver. But I think that I can see from a distance that things are setting up pretty well in those two metals.
Eric, last question. I don't know too many people who are excited about their stockbrokers or where they're buying shares through, or their actual brokers themselves or advisors or CEOs who they're following. But people love Sprott Asset Management. You guys have a good reputation. You and Rick Rule have made a lot of people very wealthy, and you guys have a great reputation in a sector that is not known for great reputations. And I wanted to ask you, not just in your business, but if you have any advice for people who are either building a business. You have built a very successful business that is loved by people, a good brand. What are some things you focused on when you were building this business, and some things that you feel like you guys are the best at?
Well, I've always sort of put it down to try to be an opportunist, right? That we're all given the same amount of data. Some of us look harder for the data. Some of us analyze the data better. And normally the data speaks for itself in the sense of what's transpiring. And I think if people want to sharpen their pencils and watch the data as it unfolds, you can have an advantage over those who aren't necessarily looking at it that carefully. And you have to be, not in the herd, because the herd's normally going to be wrong. And if the data looks like you have something, then you have to stick with it. And it's been a very trying time, I know, for most precious metals investors, including myself, over the last 3 years. But I'm not undaunted from a professional point of view that our view is it will not play out. I'm absolutely certain it will play out. It may not play out when I'd like it to play out, because I think it should have played out long ago. But you just got to stick with what you think is right. And in time, look, I've been in the business for a long time, and I've made a lot of great calls, and most of the things I think that were likely to transpire have transpired. I would say that so far the jury's out on our call on gold and silver in these last 2 years, but I think ultimately, yet again, we'll prove to be correct in our analysis. So we're happy to stay with the forecast that we have.
Eric Sprott of Sprott Asset Management. You can reach these guys at sprott.com. We'll have your website as well as any other information on Sprott's Thoughts, a daily or a weekly email. I believe 3 times a week you can get the thoughts of John Embree, Eric Sprott, and Rick Rule. Eric, thank you so much for your time.